Hey tax students, this is your teacher Roy with a demonstration video for the Chapter 3 Homework B problems. So let's get started here. You can see there are two different tax returns. I'm just going to demonstrate this first problem, problem 3-1. And problem 3-2, I'll give you some more detailed information than what's in this homework assignment, yeah, to help you. But let's go ahead and read the instructions here for this first problem. Our taxpayer is Gordon. He is single. He's under age 65, so we know we don't have an additional standard deduction. We're given his social security number and his home address. And in this simulation, that's already entered in the 1040 form. He has a business named Mobile Berry Perry, where we're going to have to prepare a Schedule C. And that's the main topic here in Chapter 3, preparing a tax return, a Schedule C, for sole proprietors. And here's most of the information for his business that's going to go on Schedule C, including this travel cost is $1,600. And we're given transportation information, mileage information here. So as we learned here in Chapter 3, there's two different methods of deducting transportation or automobile costs. One is based upon a percentage of the actual costs, and another is multiplying the business miles that are given here times a rate that is adjusted for the cost of driving. But I believe the actual cost, which includes this truck rental of $24,000, is going to be larger than the per mileage method. So we're going to use the actual cost of this $24,000. And looks like that's the only truck or auto costs we're given. But if there are things like gasoline, auto insurance, car registration, that also would be part of the actual costs. But again, we're not given that. We're only given this truck rental. And we're not, again, going to use now the mileage method. So we can pretty much ignore any calculation with these miles over here. Even though in a real return, you would have to report the miles just to show that there's business use of the automobile. We're given information about a business trip here under travel of $1,600. And that includes a one-day seminar. And he spent 2 days snow skiing on part of that trip. And because most of the time was dealt with recreation or personal travel, you cannot deduct that airfare here of $400. Now, if most of the time was spent on business travel, then we could deduct all of the airfare. But again, here, most of the time was spent on personal recreation, so none of this $400 is deductible. We're told that his lodgings was $300 per night for 3 nights. Again, one of the 3 nights is business, so we get to deduct $300. And his meals were $100 per day, so we get to deduct just $100. At least for the year 2022, business meals while on travel should be all deductible. Meals on business travel should be 100% deductible, so $100. And we have a uniform cost, and because it's just made for his business, we should be able to deduct the whole thing. In other words, it's not appropriate for personal use. Gordon was divorced back in 2017. We're not given the specific date, even though that's something we need to enter into the tax return. So we're going to assume it's January 1st, 2017, 01/01/2017. And because it's before 2018, if there is any alimony being paid even now, the alimony is going to be taxable, in this case, to Gordon, who's receiving the money, and deductible by his ex, Tanya, who's paying the money. Again, the divorce has to have taken place prior to 2018. and that's our case here. Otherwise, if it's 2018 and later, you just ignore alimony for income tax purposes. We're told that he has children, and one of them lives with him for 5 months during the year. And he says he pays more than half of the support. Well, is that person, that child doesn't qualify as a dependent because it was only for 5 months versus more than half the year, even though he had paid more than half of the costs. Okay, so we're going to just ignore that potential dependent. In fact, there is no dependent here. Okay, and then we're given some tax forms we're going to have to fill in. So let's take a look at his W-2. Okay, here, Tenderloin of Laramie. He has 21,000 of wages. So let's enter that already in the 1040 form. Well, let's fill out the top here. So he is unmarried, so that's going to be single. Remember, he doesn't have a dependent, so again, not head of household. All of this name, social security number. We do possibly need to enter the social security number here or on Schedule 1 if you're receiving alimony. And then were we told anything about presidential campaign? Let me search the form here. So I go Control or Command F and I type in, let's see, President. Looks like it appears only one time and it's right here where the question is. So we're going to assume that there is no election to contribute that $3. Our taxpayer Gordy cannot be claimed by anyone as a dependent, so that's none here. He's not over 65 or blind, so none here. He's not married, so spouse is none. And then the wages, again, that's 21,000. And then new for 2022 is all this lines 1B through Z dealing with wages. So we don't have any of that. So the same 21,000 goes into line 1Z. Since we're looking at the W-2 already, let's pick up the other amount that has to be reported on the 1040 form. And that's this federal income taxes withheld. Let me just scan this 1040 to see if there's anything else. In the tax software, we know we eventually have to enter all of these amounts, and the computer would automatically report it in the correct form. Okay, there's not even Wyoming information here. Yeah? So let's enter this 1600 into the 1040 form, and that should be on the back side, page 2, here in line 25A, and then subtotaled in line 25D. Let me double check again. 1600, yeah? So let me close this form. And let's move on to the next income item, which is the 1099 interest and dividend. So that's 3,200 coming from InvestCorp bond fund. And because the interest is more than $1,500, it first needs to be reported on a Schedule B. Here's Schedule B in Part 1. The name is Investment Corp Bond Fund, and the amount is 3,200. And let's subtotal that. I'm just using the tab key to move to the next field to fill in, yeah? 3,200 subtotal. And then we need to work on the dividends, which is reported on the 1099 DIV. This time from InvestCorp Small Cap Equity Fund. Let's see, of these amounts here, what I need to report on Schedule B is this 56.78. The instructions tell us to round to the nearest dollar, so I'll just drop this 12 cents. 56.78 coming from Invest Corp Small Cap Equity Fund. 56.78 and then total 56.78. And it looks like this part 3 is already completed for us. So the interest and dividends, let me now carry it back to the 1040 form. Interest in line 2B, 3,200. Let me confirm that again, 3,200. And then total ordinary dividends is 56.78. Goes in this line here, ordinary dividends 3B, 56.78. But then included in this ordinary dividends are qualified dividends reported here under 1099, here in box 1B, 54.78. This 54.78 is going to be taxed lower than the other income. And that's going to be calculated here on this qualified dividend and capital gain worksheet. Now, looking at that 1099, there's a third number here, which is capital gains, also taxed like this qualified dividends, but it's not included in here. Yeah, remember this number, qualified dividends, is included inside here. This number, capital gain distributions, is not included in any of these numbers here. So what we're going to do is enter this number directly on the 1040 form. We're assuming there's no other capital gain earned by Gordon. So the amount is 1,046. I'm rounding up to the next dollar here. 50 cents and above, you round to the next dollar. So 1046. And here you can see the capital gain line. Now, most times you would enter capital gains on a Schedule D, but if the only thing you have is capital gain distributions coming from a 1099 DIV, then you would be able to check off this box, which I cannot click on, and enter that capital gain distribution. Now, was that correct? 1046? I have short-term memory loss here. 1046. Okay, and nothing else. So let me close this window. 1046. Now we have other income coming from Schedule 1. So let's take a look at Schedule 1. And here, the first box we need to fill in is alimony. So again, going back to the instructions, we're told that he's getting $300 per month. So I'm going to do this on an Excel spreadsheet. So let me bring this up on my screen. 300, 12 months, so I multiply one by the other. So total alimony, let's try that again. 12 times 300 is 3,600. And let me enter it on line 2A of Schedule 1, 3,600. And here, the date of the divorce. Again, we're only told 2017, but make sure you enter it to get it correct. 01/01/2017. And the only other income item here on Schedule 1 is, again, the main topic of our Chapter 3, and that's the income, or really in this case, a loss coming from Schedule C. So we need to do the Schedule C before we fill in this blank here in Schedule 1. So let's jump to Schedule C. And you can see that the top portions of this Schedule C is already filled in for us. Okay, even this cash method of accounting checked off. even participating in this business, material participation. The reason why they ask this question is that if there is a loss, we should be able to deduct the loss if the business owner, the taxpayer, is materially participating in the business and not just a passive investor. Okay, so let's go ahead and fill in the amounts here by going back to the instructions. Let's see if I can bring up more than one item on the screen here. I'm going to collapse this list here and then show three different items on the screen at the same time. Let's show 1040, let's show schedule 1, and then schedule C in the bottom window here. And make the schedule C bigger. So we're looking for the gross receipts or the sales. So in this colored box here, the revenue is 78,000. Let me tab, and it's a subtotal of 78,000. Now the next line, line 4, is the cost of goods sold, and we're given information to calculate that out. That's the inventory, beginning and ending and purchases. And on the tax form, it's calculated back here on page 2 of the Schedule C. Looks like this cost box is already checked off for us. So beginning inventory is 5,600. The purchases for the year is 43,000. And then the total. Can I do this in my head? I'm not going to trust my brain here. So 5,600 and purchases of 43,000. The total is 48,600. I'm going to copy that and paste it here in the next line. Ending inventory is 7,800. And I got to subtract that out to get the cost of goods sold that we're going to deduct back on page 1. So again, let me have my spreadsheet do that. So cost of goods sold is 4,800. 4,800. And here it says go back to line 4. Line 4, 4,800. And I'm going to subtract that from the 78,000. 78,000. So I add that and minus the 4,800, 40,800. 37,200 here in line 5. Tab and then also in line 7. Now let's get into the expense section. That's mostly the rest of the numbers we see here. So the next number is truck rental. Here you can see in line 20 two different rental costs. Line A for vehicle and line B typically for office or building rent. Yeah. So A is that 24,000. Office rental, the next line 8,600. Again, that's these two amounts here. And then advertising, here in alphabetical order, the first expense, 500. Insurance, that should be the next one down here, 3,000. Food license, that's tax and license category here in line 23, $450. And then uniform, there's no uniform field here. Yeah, so typically you would go to the back side of the Schedule C and you would write in the description and then the amount. Here our description is already there, so 200 for uniform. And dues already again written in as a title here, and we have 100. Okay, the tricky one again is the travel. We're told here 1,600. So let's go back and look at the description again for the travel. 1600 is coming from the one-day seminar. The airfare was 400. Again, we cannot deduct any of that because most of the days, 2 out of the 3 days, was for vacationing or recreation, yeah? So none of this 400 is deductible. Lodging was 300 per night. So he spent 1 day at the seminar, so we get to deduct one night of $300. And meals were $100 a day. So get to deduct 100, the whole thing, yeah? Not necessarily 50%, but the whole thing while um, on business travel. So that looks like $400. So let's look for travel here. Alphabetical order. 400. Okay, so that's 400 of the 1600. And then office expense 400, that's at the top right here in line 18. Now let me think. Should I move the 100 here down here for meals? Let me check my notes. I think I'm going to do that. Included in this 400 was 300 for the hotel and 100 for the meals. Yeah, so I'm going to separate it out. And again, while you're on travel, the meals, business travel, the meal should be 100% deductible, at least in this case for 1 day. I need to subtotal the backside, yeah, for this line 27A. So that's, I can do this in my head. 1 plus 2 is 300. So that's 300 here in line 27A. Okay, so now I need a grand total here in line 28. So let me bring up my spreadsheet again. So that's 500 advertising, 3,000 insurance, 400 office expense, 24,000 rent for the truck, 8,600 for rent for the office, 450 for the license, 300 for travel, 100 for meals, and 300 for other. 37,650. 37,650. And then I need to subtract that from my gross income here, 37,200. So that's a loss. Make sure you enter the loss as a negative number, minus 450. And then we'll see in the second problem, there's going to be a filling in here for home office deduction. Even if you had one, in our case, it would be 0 because you already have a loss here in line 27, 29, and you cannot make the loss bigger, yeah? So same loss here in line 31, minus 450. I think we're done with this schedule. So let's take that loss and put it on schedule 1. Where's my schedule 1? Here, no. Here, this is schedule 1. And line 3, minus 450. So I have two numbers on schedule 1, the alimony and the business loss. And I need to combine the two. 3,600 alimony. So the total of those two numbers, 3,150. 3,150 at the bottom of schedule 1 and re-entered on the 1040 form. I just forgot the number already. Bottom of Schedule 1. Was it 3150? 3150. 3150. So now I get a grand total of all the income. That's the wages of 21,000, interest of 3,200, ordinary dividends of 5678, capital gain distribution of 1046, and other income. That's the alimony minus the business loss. So grand total 34, 40, 74, 34, 74. Let me double check. This is line number 9. Same number subtotal in line 11. Now here in line 12 we can deduct either the standard or the itemized deductions, and we're not given enough itemized deductions, if any. So we're going to deduct the standard, which the general amounts are listed off here in the margin. So single filing status 12,950. 12,950. Subtotal 12,950. Then I subtract that out from the AGI. That's this 34,074. Spreadsheet 34,074. 12,950. 21,124. Okay, and of course, the general rule is to look this number up. If it's under 100,000, look it up on the tax table. But because we have qualified dividends and here capital gain distributions, those two types of income get taxed at lower rates, and then the rest of the taxable income gets taxed at the regular rates. So the way we calculate that out is to fill in this qualified dividend and capital gain tax worksheet. Let's put it here. Let's put the 1040 here. And there's a lot of detailed steps here on this worksheet. Looks like all the way down to line 25. Yeah, I think I'm not going to do the whole thing, but just kind of go over some general rules here. And I'll give you the check figure for what should be the bottom line, the tax for the whole year. Anyway, here in line 1 would be the taxable income. That's this line 15 here. 21,124. Then we're going to back out of this taxable income the qualified dividends that are in line 3A of the 1040 form. Not this ordinary dividend, but this qualified dividend, 5478. 5478. And then another thing we back out is the capital gains or the capital gain distribution. Typically, again, prepare a Schedule D like we had learned last semester in Accounting 134. But we have enough information right here on the 1040. And that's this line 7 here. There's 1046 coming from the 1099 DIV form. So we would add up the two. $54.78, $10.46, $65.24. And then we would subtract it out of this taxable income. remember, these two incomes are already included in this taxable income. So now let's see, 21,124. Taxable income. And you can see the two, really the three, these three items right here are these two items here that I'm going to subtract out now. So 1460, 600 is the rest of the income that's going to be taxed at regular rates. Again, these two gets taxed at lower rates, probably even zero because the income is relatively low. This number appears relatively low. So our case here, single filing status 41,675. If our income, which is this taxable income here, is less than this amount, then all of the qualified dividend, all of the capital gain, long-term capital gain or capital gain distribution get taxed at zero. Also on this worksheet, you can see this dollar limit here, this 459,750. If the taxable income were larger than this for that single filing status, then the capital gains and the qualified dividends get taxed at 20%. You can see the rate right here. And if the taxable income falls within this 41,675 and this 45,750, then the capital gains and qualified dividends get taxed at 15%. But because our income is below this 41,675, capital gains and qualified dividends are zero tax rate, tax-free. Now the rest of the lines here is just making sure that the qualified dividends and capital gains just doesn't get you over this 41,650, where part of that type of income will be taxed at zero and part of it at 15. Or here, if your income just takes you over this amount here, then part of the qualified dividend capital gain tax at 15 and part of it at 20. That's why you have a lot of lines here. Yeah, I'm just going to give you the answer here at the very bottom, but you got to fill in all the lines. Yeah, so make sure you follow the instructions. So what you should see at the bottom down here is 1550. Again, you're going to have to use the tax table. Yeah, this tax table is downloaded, and you're going to look up this 14,600 for single filing status, and you're going to find this amount here as the tax for the whole year. And then you're going to rewrite it back on the 1040 form here at the beginning of page 2. 1550 and subtotal and subtotal and subtotal again 1550, and you can see you already paid $50 more than that tax. So ultimately down here you're going to see $50 overpaid, and you're going to have the whole thing refunded. I'm going to just use one of my check my work answers over here, yeah, and you're going to see the score. It's not going to be 50%. Remember, there's two problems, so a perfect one problem would be 50%. I haven't filled in everything, yeah, like all these blanks here I haven't filled in. If you enter the wrong number, you would see a red X. So looking at the 1040 form, you can see the correct answer is a refund of $50, but I didn't fill in all of the other blanks like over here, yeah. So I'm going to leave that up to you. Now again, you have 3 check my work attempts for 1 submission. So when you use up 3 of those attempts here, then you can submit it and get back another 3. But don't submit until you finish both problems. And then when you start your second submission, this 3 check my works will refresh to another 3. 3 check my works for problem 1, 3 check my works for problem 2. Okay, so that's just a run through for problem 1. And again, I'll give you some hints of what you should see to clarify the tax laws here for problem number 2. Okay, I'll talk to you later.